All right. Happy Thursday, everybody. It's May 16th, 2024, here at PreciseAlgorithmTrading.com, and I'm going to dive through this pretty quick. Let's see. The automated trading systems, the Dow fell here more than it's gained lately. Uh, Today's trades are there, they speak for themselves. The Russell is really having trouble getting off the mat. So we've had some hope here for a bit, but here lately we've just been falling again. The updated NQ, um, still looking good, really. A little pullback after a little rally. This is what it's done today. This is going to be a common thing. These $150 stop outs, and I actually think that's actually okay, because what we're looking for is moves like this, and there are tons of them. The old NQ spiked a little bit yesterday, pulled back today, really common. So that big spike of one nice trade followed by four losers, it's part of that whole $40,000 decline that I'm trying to eliminate. So this is the biggest decline in this. I believe I've spoken about it, is something in the tune of $8,000 with the same three contracts. And you see this gets to $100,000 on this chart, and this gets to $100,000 on this chart without, I mean, this has the giant pullback. And okay, this only gets the 95, but still, uh, that's okay. All right, the manual trading systems. So big news today, and I'm sure people are going to talk about it, is that the Dow got to 40,000. 40,051 was the high. However, it closed at 39,869. So that's not the close everybody's probably hoping for. I stick to my statement that I think we're going to get up there to that 40,500 and then see where it goes. The next move after that, I can actually activate, or I'm sorry, edit and put 1618 on here, is possibly to 41,298, but obviously not all in a straight line. Not normally anyway. Now you also see over here on the hourly chart of the Dow, which is going to be this way for pretty much all the index products, is it had a sell-off toward the end of the day. There are 6.5 hours in a chart in a day for the markets, so each one of these is an hourly candle. You can see that had a big sell-off here at the end of the day. And if you look at the S&P 500, we're almost down to the first 30 period moving average, which we could get a bounce out of, or the second. If we go all the way down to the bottom of the Keltner channels, I'd be looking for a reversal again anytime in there. And obviously we can use our stochastic for a little bit of timing with that. I'm still not going to be buying this market at these levels. I'm going to wait for a deeper pullback, because I've got plenty of other markets to be able to dive into. Probably have a few stop out of our positions, but that's just trading. That's just how it works. Let's look at. All right, let's look at. That's the S&P. So the S&P went down 11 points. The Dow went down 38 points at the end of the day. The Russell went down 13 points. The Nasdaq went down 44 points. But the story is pretty much the same. The Russell here is potentially putting in a lower high, and that's probably enough to give weakness to the rest of the markets for that pullback, although I think it's going to be a healthy pullback. because the bullish percent indexes have flipped. The Dow we talked about, that's actually a lower high on the futures. The transportation index is looking like that, which is relatively weak. This is the exchange traded fund for it, which actually could look a little bit better if it starts to turn around and get bullish. The NASDAQ continues to have strength, pushing up into the 52-week high. So, yeah, still a lot of strength under the hood, I think. Oil is trying to mount a rally. It's rallying on the hourly chart. Let's look at it on a 4-hour. Yep. It's trying to turn around here probably. Or maybe. Gold. Gold looks like the other markets, like it might be trying to put in a lower high, which would then probably push us into a lower low. UNG, so natural gas has been rallying. I didn't partake in this one, probably should have. It's been a nice rally off of the hourly chart. So if I was going to be in this, I would have traded pretty much on either this pullback right after the signal, or on the signal day itself. And then once I started getting positive, like you would be right now, and now it's over the spawn A of the Ichimoku cloud, I'd start monitoring based on the hourly chart, just not to lose my profit. So I could probably show, like Berkshire here. I'm monitoring Berkshire off of the hourly chart because I'm positive in this trade, and it's literally, of course, I guess mostly this is an hourly trade anyway, because that's really what I've done. The daily hasn't even turned around to give us a signal yet, but in any case, it's positive, so I'm monitoring and adjusting and protecting my profits off of the hourly chart. Same thing goes for Dell at this point, because it bounced so nicely that now, granted, it's got to fall quite a bit if it was going to take out my stop, but I am using the stop off of the hourly chart instead of the daily chart. And I really don't expect it to fall all that way, but if it did, that's kind of my fail-safe stop. So, just some examples of how that works. What's copper looking like? Same kind of, pretty much like the other commodities. Just to keep looking at it every now and then. The Bitcoin looks like pretty much like the transportation index, actually, like it's trying to mount a new rally. But it looks like it's got some ways to go before it can get out of its own way. But it has come back and filled in. Usually when you get a nice big move like that, you'll come back to where it started before you can rally again. And let's see, let's get rid of that because I don't need it anymore. TLT. Let's look at TLT. So TLT, I'm monitoring for a trade. And when it gapped the way it did the other day and got over this trend line, that it's a long-term trend line. So look at that. I drew a trend line in. And now we've broken over it and clearly gave even a buy signal that day. Well, I don't want to just buy it because, as you see, even right now, it went up, ran into resistance, and that then pulled back, and it could pull all the way back really into these pivots before before it could become before it could rally, I guess is what I'm trying to say. So over here we broke through that trend line. That's the same trend line, and I'm expecting a pullback into these moving averages or to the other side of the Keltner channels. And when I get into those levels, which I might as well put on here, that's really when I want to be interested in the trade. And you can see I've even got crosses back down on the trend line as an alert. Just because it broke above the trend line and it hasn't done that and stayed there since before December or since December, that doesn't mean it can't come back under the trend line and continue its mount higher. And by then we should have the moving averages in the right direction. So just to kind of explain how I approached this, I'm going to expect it to fall back into this pivot, this area where old resistance, it's this whole area right here, would become new support, and then it can rally. So, and if I never get on, I don't care. It's just like any other trade. You either get it and get in, or you don't. But breaking that long-term trend line could be a great shot at a new, really bullish trade. And a bullish trade in TLT would usually move higher when the markets go lower. So it's a nice counter to just being a long regular stock. So it's almost a hedge, but it's a trade in and of itself. All right, that's enough of all that. I do have. Let's put the ES back up here. So the ES broke above the cloud on the Ichimoku, and it continued to rally. So this particular study where it goes from red to gray back to green. I explained all this the other day, and then back to gray again. That's usually when it goes gray. It's obviously neither red or green, but then this one happened to go back to green instead of red, but then it got gray and then went red. So, but then it went to gray, and now it's back to green, which is common to go from red to gray to green, and then vice versa. So, but I also, again, I kind of expect this to stay green, and even in this pullback, I do expect a pullback into this dip right here that shows up on the cloud. And if it breaks through the cloud, that's a bigger problem. But with the underlying strength in the market, this is a really cool tool because it'll actually show you even when you're on a pullback. And here's that trend line. If you extend it, would go up into here. I expect really kind of a pullback into that zone. And I think the bullish percent indexes and everything can actually stay bullish through that move. And all we got to do is just catch it at the right time to catch the wave. Here's the VIX, and we've pulled back hard, pulled up a little, pulled back hard again, which is some of the strength of this market. And now the question is, do we just walk sideways for a while with low volatility? And I would expect that. Not without some drama along the way. I think we'll have some. Probably some coming up real soon. Tomorrow's Friday. Fridays are typically less bullish, unless and they typically are. People sell into the weekend. Every now and then they'll surprise you with a nice big gangbuster day, which we could get tomorrow because of the Dow and everybody wanting to shove that thing and have a closing above 40,000. Basically, the fear of missing out. Here's another look at the S&P 500. This is 15-minute on the right, then 30, then 1 hour, and then 4 hour. And you can see we were going up and everything was green, and we're literally building from the inside out a more bearish looking tone. We've got magenta arrows, red arrows, less blue arrows with targets, and all the candles have turned red. And now they've turned red on the 30. They've turned gray on the 1 hour, and they're still green on the 4 hour. But this is what we want to watch for renewed strength, is that when this thing flips back to gray or back to green on the 15 and starts to build from the inside out. Don't forget too, I think this is worthwhile saying, is you can add these symbols together, particularly put all the futures together, the NASDAQ, the Russell, the Dow, and the the S&P 500, and you can see it's kind of a proxy for basically the overall market, and see what everything's doing with regard to red candles, green candles, where the cloud is, where the moving averages are, where the Keltner channels are, and you put all that together, and just another source for how the markets are moving, really as a whole. And I've shown this before. These are the advanced decline lines of the different markets, plus the ticks, and you can see we had strength this Thursday. So Wednesday we had that strength, underlying strength, and then today we really fell out of the gate, pulled up a little bit through the day, and then continued to fall. So that's showing that same weakness that we can see that showed up halfway through the market today and closed lower. So, all right, last but not least, bullish percent indexes. The industrials didn't move. The NYA barely moved, 0.15%. Transportation index didn't move. The NASDAQ up 0.51%. The S&P 500 minus 0.29%. The S&P 100 minus 1.33%. And the NASDAQ 100 up 1.67%. And with that, I'll leave you until we do our weekend review, and I'm going to be doing that remotely, so no promises as to when it gets done or the quality of it. So until then, take care and have a great day trading tomorrow, if I could say that. Yeah, see ya.